Good day, Tea with Travis. Today is Friday, December 5th, and the dreaded jobs report came out today. Boy, it was worse than I expected even. I knew it was going to be bad, but this was really bad. 533,000 jobs were lost, the payroll jobs, and then unemployment dropped to 6.7, highest reading since 1993. And actually the 533,000 jobs lost is only the fourth time in history that we've lost more than 500,000, as well as this is the largest drop since 1973. There's two different dynamics with unemployment rates versus non-payroll job losses. Non-payroll job losses is simply people left the industry of working. So that means they could either have got fired, laid off, gone back to school, maybe decide to not work outside the home with children, maybe raising children. So it's just people out of the workforce, retirement, death, all those things. That causes the non-payroll number, the 533,000 that we lost. We're up to 1.9 million running total for a 4-week average. So huge numbers. And the unemployment numbers is simply, if they called your home and did a survey and said, are you currently looking for work? And your response is yes, then that would be the unemployment numbers. That's how that is different than the jobs numbers. The jobs numbers, again, so if you called a person and said, hey, are you looking for a job? No, I just retired, or no, I decided to go back to school. Those are the numbers that would go into the non-payroll job losses that fell into that 533,000. The 6.7% unemployment rate is that different equation I just mentioned. So both terrible numbers. It's the market typically, the mortgage-backed securities or bonds, when more unemployment is down, or up, and more jobs are lost, typically the mortgage-backed securities will rally and rates will get surprisingly better. I think this number was so dismal and so ugly that the stock market's reacting as expected. They're down about 200 points in the Dow right now. It may get worse, and I imagine it will before day's end, because we are early. This is an early update. But mortgage-backed securities should trend higher. I mean, they're up 6 basis points right now. They were down as much as 20 when they first announced that terrible number, but they, I think, are seeing that it's a safe flight to go to mortgage-backed securities and treasuries this morning. The good news again is the dollar's up and the oil's down. Oil broke 43; it's down at 42 in the upper $42 range. So again, I mean, we're looking at great numbers for the gas pumps. Outside of that, this is, like I said, the fourth time ever that unemployment's been below 500,000. So scary numbers. Everybody's scrambling for historical data right now, but it's really hard to get historical data when this is unprecedented times, and it's only been one other time it's been like this. So right now the big three are up on Capitol Hill again, begging for that bridge loan. It's just the dire consequences of having the big automakers file bankruptcy and the far-reaching impact it would have for unemployment, as well as even things as if you own a Ford and Ford files bankruptcy, the value of your Ford is going to go down because of parts and service and all those things. So if you start really looking down with the microscope at the impact of these decisions, on paper you think, well, yeah, we're not going to bail out Ford. Well, it may be worse than you think if you really look at the numbers. So with that, not too much positive other than mortgage rates are looking awesome. I mean, we're down, again, I locked a client yesterday at 4.875, a different client from earlier in the week with less of a discount. So, I mean, their APR is hardly over 5, which is just amazing to see 30-year rates that low. Again, if we stay steady, we're going to go into the weekend strong for mortgage rates being low, and look forward to getting lower even next week if possible. If that's even possible, who knows? This is the lowest time rates have been since the 60s. So have an awesome Friday. Enjoy your day, and we look forward to serving you. Be blessed.